Hello traders, Gary Wagner here. It is 10:25 in Honolulu, 4:25 in New York on Thursday, 20th day of April 2023, and this is the Daily Report for Gold and Silver. Federal Reserve officials will go silent in 2 days on Saturday, April 22nd. That's when the blackout period will go into effect, and they will stay silent until the conclusion of the May FOMC meeting. However, there is now 3 Federal Reserve officials that have expressed the need to continue to raise rates even after the anticipated 0.25% rate hike that's expected in May. Now, Federal Reserve President John Williams has come out speaking to a group of bond markets experts at New York University, saying that inflation is still too high and we will use our monetary policy tools to restore price stability. Although the narrative remains the same, it seems that market participants are focusing on the fact that inflation is persistent rather than focusing on raising rates, which has a bearish influence on gold. Gold gained at $9.20 today, or 0.46%, with the most active June contract currently fixed at $2,016.50. That had little input from the U.S. dollar. The dollar is down 0.13%, and the index is fixed at 101.54. Lastly, silver futures were in essence unchanged today, with a decline of 0.011 cents, in other words, 1 cent, and May silver is currently fixed at $25.36. Traders, we are quickly approaching the blackout period in which Federal Reserve officials will not make any comments up until the end of the FOMC meeting. Nonetheless, information coming out indicates that we could see the Federal Reserve, in fact, have more than one more rate hike before going on hiatus or pause. It is for that reason that we saw bullish momentum continue in gold, and we sent out a trade alert to cancel the trade alert yesterday to try to buy June gold at $1,999.30. All traders should have canceled that open limit order as well as the stop at $19.8030. We did see pretty nice action in the market itself. The low was above 2,000 in June futures, 2002. We are very close to the high that came in, which was 2024, and we're currently sitting at 2016. The only thing that was worrisome is the lows that came in the other day when we saw gold break very, very hard below 2,000, trading just above $1,980. We are back above what I consider to be a pretty critical support level, which comes in at 2014, and that is represented by this high that came in around the 16th of April. Inasmuch as the important high was 2014, we have had new highs that have come in, one above 2040 right here, as well as the most recent high just at around $2,063, very close to striking distance from the all-time record high of 2,088. When we address that and adjust our Fibonacci retracement by taking this start point higher, we can see that the recent correction that came into gold did go below the 23.6% retracement, but effectively fell very short of the 38.2 and now is back above this price point. $2,004 effectively is the key and critical important level of support that gold needs to hold on a closing basis. We have seen gold close above 2,000 now for the last 11 consecutive days on our daily chart. This, of course, is a half-day chart or 780 minutes. We will be doing an interview with the gentleman from Wall Street Silver this afternoon, and that will air either tomorrow or early next week. We remain bullish as long as gold is able to hold a price point above $2,000 per ounce. However, we are remaining flat with no active trades in either gold or silver. We are looking for the best possible entry price. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.